We mentioned the rise in rates, but despite the move, the banks, they've been sitting on the sidelines pretty much. So what is wrong with the struggling sector? Which names could be due for a breakout? Let's go off the charts with Todd Gordon of tradinganalysis.com. Hey, Todd.
Hey, Melissa. First, before we jump into the financials, let's take a look at the bond market as measured by the TLT. Obviously, financials are very responsive to where interest rates are going. And this chart, to me, is so interesting. This is TLT back to 2016. And you can see this thing is just sitting on the edge of a cliff. I think just hanging on. I mean, it's got possibly five tests of this support level at 116. Personally, I'm short. I do think we break lower, and that obviously spells for higher interest rates, which should help the Fed. One thing that I would put to you guys is, why is this bond market moving lower? Is it that we have a hawkish Fed, and in fact, the economy is very solid, or is it China selling bonds? My good friend Ryan Dietrich, who's a fellow technician, put out a great chart. Chinese holdings of U.S. Treasuries at a 6-month low. So are they selling, and is that a good thing? And I think that kind of fundamental stuff that I just put out there spells into this chart in XLF, the financial ETF. Guy and I were talking this about a month ago. Our level was just about 28.5 right here in XLF. We broke out, but look what it's doing. It's coming back to retest. I think this whole market is just in such kind of limbo. You know, is it risk on? Is it risk off? It's a very range-bound market, and I think it just all depends on what those bonds are doing, as I said in the last bit. So I say let's respect the trend for now. The two charts I brought along within XLF show a very good chart pattern. So I say, come on, XLF, let's hold 28. Let's get a bid here. So the first one I thought that looked pretty good was Citi. So we'll start up on the weekly chart in Citigroup, and you're going to see that we have a nice 5-wave Elliott trend. I love surfing those Elliott waves, and they'll give you 3 main phases of a trend. So there's number 1, that's accumulation. Here's the middle one, which is widespread participation, and finally, you should get a 3rd phase of this trend, which is distribution. So longer term, I think Citi looks good. This is the weekly. Let's get down to the daily. And the daily, what you'll see is a very nice kind of inverse little head and shoulders here. Oops, that's going to be another one. We'll kind of just zero in on that one, but I just want to, oh, there we go. Thanks, guys. So what you're seeing here is you've got a left shoulder, you've got a head, you've got a right shoulder. Here's that same kind of equivalent 28 level in XLF. Citigroup looks like it's holding. Support is in place. So if you do want to get some long exposure in Citi, I like that, provided we're above that 72, 73 in Citigroup. And finally, the Mac Daddy financial out there, JP Morgan, really, really strong looking chart up there. Just kind of like a continuation cup and handle here. You get a base, a little right handle here. If you can get that launch up through the 120 mark, JP looks good. So, you know, if those banks can push up, bonds press down, I think those are your two guys to take you to new highs.
You know, Todd, when we're thinking about the banks, we always think about rates, and we're seeing the 10-year yield rise to, 3.1%.
Yep.
We're also seeing the 2-year rise as well. I'm just wondering, when you're taking a look at these charts, is there any correlation? Is there really any correlation with the yield curve or the spread?
I really think so. I think that's why this whole market is just so indecisive. I mean, it's true that TLT, which tracks 20-plus year treasuries, those yields are moving up. What's moving up, to your point, is the shorter end, and that's flattening that yield curve, and that's preceded the last 2 major tops, 2000, 2009. It's not an inverted yield curve yet, but this whole market, I think, is on hold because we just don't know what to make of it. It's very indecisive, so I think that flattening yield curve is really the key for why we're not breaking higher.
All right, Todd, thanks. Todd Gordon, tradinganalysis.com. You're long.
I'm long banks. Look, I think the flattening yield curve, banks borrow short and they lend long, but they also borrow short and they lend short. And you know, we're getting near a 3% 2-year. If anything, I think that's pressure on equity markets because I think you're actually going to suck some yield chasers out of it. But bottom line is financials have totally underperformed when rates have been moving higher. Okay, yield curve's been kind of flat. And that is troubling because I think they are the most levered to this economy that's got so much confidence around it. I stay long banks.
I agree. I mean, I like Tim. I'm frustrated they haven't traded better. There is this perception that banks are a giant 2-year, 10-year bet, which they're not, though. I agree with Tim. They are not. They are not making that giant bet. However, I do think if rates generally move up, it's better. I hanging on JP Morgan, Citibank, Bank of America. I like them all. Citibank, I think, has the most upside.
Whether or not they are, whether or not they should be,
right,
dependent on the 210 spread. that's the way they trade. I
Yeah.
mean, that's just the
Well, right.
reality.
Brings out something different until
Right,
the value will.
exactly.
Right.
Yeah, so I mean, everybody's looking at the net interest margin, and the 210 spreads the proxy for that. So as long as enough people believe that, then that's how the banks are going to trade. That being said, I actually think something like a JP Morgan trades very well relative to the other banks, and actually today even. So for me, if I'm going to play the banks, I want to be in JP Morgan.
Real quick, Wolf Research initiated banks today. I think Citibank, $91 price target, outperformed. That's obviously a huge move from 73. In terms of valuation, that's probably the cheapest one out there.